Today, we're going to be taking a look at NFT market fraud involving a famous actor and the recent Bybit layoffs for employees of the company. The decentralized finance space is an incredibly unpredictable ballgame. With frauds and layoffs, the crypto winter never seemed bleaker than this. When things are going to improve is anybody's guess. But for now, stay tuned as we cover any developments. First up, trouble in paradise. Chinese NFT platform Lian has come out and publicly apologized for stirring up trouble in Hong Kong after the agency of actor Louis Koo claimed that the platform was exploiting Koo's photos for marketing without permission. According to a statement from Koo's agency Master Kingdom published on Koo's official Weibo account on June 17, 2022, Lian, a well-known Chinese digital collectibles platform that sells blockchain-backed images, featured pictures of posters from Koo's 2021 crime thriller G-Storm and claimed to be working with Koo. Then, Master Kingdom confirmed that Koo had no connections to Lian's business operations and vowed to look into and prosecute any false claims, deceptive practices, or scams carried out in Koo's name. In order to prevent confusion, Lian was also asked by Koo's agency to stop any infringing behavior and remove any false remarks. The film's distributor, China Hui's, and copyright owner Mandarin Motion Pictures jointly stated in a statement on Weibo that they had never given permission to Anhui Lianmi or Lian. Meanwhile, Lian released a statement on its Weibo account claiming that it used Koo's poster images with permission from creative agency Anhui Lianmi. Coming up, damage control. When Lian apologized on Weibo on June 18, 2022, it emphasized that it had always respected the legitimate rights of copyright owners and that the offending materials had been removed from its site. The NFT platform also gave the public the assurance that it will investigate the situation carefully, check any information with Koo's agency, and immediately release the findings. Given that the NFT market is still developing, many copyright problems have recently surfaced. For instance, the US-based digital artist Mason Rothschild and his digital art venture Meta Birkins are the targets of a trademark litigation brought by the French luxury brand Hermes. The luxury brand is suing Rothschild, according to several media outlets, including The Guardian, for making virtual replicas of its Birkin handbags. Adding that the Meta Birkins brand just rips off Hermes' famous Birkin trademark by adding the generic prefix Meta to the famous trademark Birkin, Hermes accused Rothschild of seeking to profit from its trademarks. Next, more layoffs to add to the list. Bybit, a cryptocurrency exchange based in Singapore, has now joined the lengthy list of businesses that have let go of some of their staff. As the Bitcoin market experiences turbulence, businesses are coming up with innovative solutions to save expenses and stay afloat. The news of Bybit's layoffs was originally reported yesterday by cryptocurrency journalist James Wu. He said that of the company's 2,000 employees, a startling 30% will be laid off completely, which is going to be a massive blow. To still keep everyone focused and adaptable, certain positions and functions will be evaluated beginning this week, the business stated. In their statement, they went on further to say that a company such as Bybit relies fairly heavily on professionalism and quick execution skills to get the job done. They went on to say that they're going to keep looking for ways to eliminate redundant tasks and create leaner, more agile teams in order to increase effectiveness across the company as a whole. Affected coworkers will get a severance package and access to Bybit's employee career support in their job change to support the seamless transition of the process, according to the company's statement. More than 190,000 users, or 6 million registered users, according to Bybit, trade futures or spots on the market every day. Over the previous year, the company had heavily invested in marketing, including a sponsorship agreement with the F1 team Red Bull Racing, which is said to be worth $150 million. Next up, how bad has the market been for workers in this space? Coinbase said fairly recently that it would be laying off approximately 1,100 workers, or 18% of its staff. Additionally, Crypto.com CEO Chris announced that 260 employees, or 5% of the company's workforce, would be laid off. Another company looking to cut costs is lending platform BlockFi, which laid off 20%, or 850 of its workforce. Since the prices of various tokens and coins have fallen, the cryptocurrency market is currently experiencing a winter. Bitcoin and Ether fell below $19,000 and $1,000 respectively during the weekend before recovering in recent days. In an effort to combat the market decline, some cryptocurrency financial service providers, including Celsius and Babel Finance, have blocked withdrawals altogether. Sam Bankman-Fried, the founder and CEO of cryptocurrency exchange FTX, stated that the Fed's increase in interest rates is what's causing the current bear market in cryptocurrency in an interview with NPR over the weekend. Now, in other news. First up, the crypto journey and investor perspective. Crypto fans can no longer refer to Bitcoin as the new reserve currency, the digital replacement for the gold standard, or even as a revolution in the concept of investing. investing. Cryptocurrency does not appear to be the next great hope for humanity, but rather more like a typical boom and bust investment, yesterday's news, basically. The crypto boom was caused, as was forewarned in a previous Forbes article, by major central banks' repeated failures to implement sound policies to prevent this from happening and regulate the market. Until they made poor choices about the money supply or neglected to combat inflation, cryptocurrencies were always going to be a wise investment. As soon as central banks lost their complacency, the value of cryptocurrencies began to decline. In the meantime, the prospect of crypto market regulations that might choke Bitcoin's steep buy-in, has increased skepticism about the market's future direction and whether it makes sense to buy low now or to stay out of the crypto game altogether. However, according to Bloomberg, investors still want to get involved in the cryptocurrency market. They're acting wisely. They believe that cryptocurrencies will endure, notwithstanding the bubble that erupted back in January. They might not save humanity from itself, as some had hoped, but they continue to be an important speculative tool and a source of security when other assets seem way too risky or volatile. Next up, the Fortnite scam token. The newly announced Fortnite token, which is a recently introduced cryptocurrency in the decentralized finance space, is apparently just another hoax, according to Epic Games CEO Tim Sweeney, who also said that the organization is considering legal action to shut the currency down. According to Sweeney, the token is trying to leverage the video game's brand loyalty and fan base so that the creators of the crypto can make a quick buck. Fortnite token's developers disagree with this sentiment, however, calling it a fan-created initiative which has no clear owner or organizational structure behind it. Of course, just calling it a fan-made creation doesn't take away from the overarching legal ramifications of creating a coin like this. This is particularly concerning because many people foolishly gamble away their savings in attempts to get rich quickly and gravitate towards the next best thing. When Fortnite token initially surfaced at the end of 2021, it was clear that Epic Games was attempting to link it to their wildly popular Battle Royale to make sure people knew exactly what the token was trying to be. A May 29th invitation to start minting your NFT creations on the NF Token site and sell on OpenSea allegedly attracted the attention of Epic Games' Tim Sweeney, who responded by simply saying that the new token is nothing short of a complete scam. These statements came despite the fact that Fortnite token just had a large conspicuous F to identify it. Lastly, decentralized finance getting its due recognition. The Australian Open's very own Metaverse received the first Cannes Lions for an NFT Metaverse initiative in the entire entertainment category for sports. This wasn't done by themselves either, and they collaborated with Web3 company Run It Wild to achieve this. The AO Art Ball also won a Bronze Lion for the sport's most creative use of technology and platforms, almost never seen before on such a scale. The Open was the first Grand Slam which successfully managed to virtualize its precinct in Decentraland's Metaverse, taking visitors on a thoroughly immersive journey through Melbourne Park with access to behind-the-scenes footage too. In addition to this, visitors had a chance to relive historic matches and take part in daily play to earn quests, with a chance to win NFTs, POAPs, and some fresh wearables from just about anywhere in the world. Run It Wild's creator Adam Decata said that there's something absolutely beautiful when the completely different worlds of creative, data, and technology intersect with each other. He claimed to be immensely pleased with what the Run It Wild team had delivered so far, especially being recognized for a project that was pretty much anchored by blockchain technology. The creator went on to say that it's been a crazy trip, pushing the boundaries of technological and artistic capabilities with the AO's faith and support throughout their journey and uplifting the people they work with. He added a bit of humor to the mix when he gave the room something to laugh about by saying, "It takes a village to build metaverse records after all." That managed to get a laugh out of even us. Ridley Plummer, NFT and metaverse project lead for Tennis Australia, stated that it's been an incredibly huge honor for a Web3 project such as this to even be recognized by the creative industry in the most prestigious creative awards ceremony. That's a wrap for this video. See you in the next one.